Ladies and gentlemen, good day and welcome to the Brigade Group's Q4 FY22 financial results conference call. We have with us on the call today the management of Brigade Enterprises Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. M.R. Jaishankar, Chairman and Managing Director, Brigade Enterprises Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen. Welcome to the Brigade Enterprises Q4 financial year 22 earnings call. I am joined by our Executive Directors, Mr. Roshan Matthew, Ms. Pavitra Shankar, Ms. Nirupa Shankar, Mr. Amar Mysore. Our senior management team is also present, Mr. Atul Goyal, CFO, Mr. Rajendra Joshi, Mr. Subrata Sharma, Mr. Karthi Bhaskar, Mr. Om Prakash, Company Secretary, and Pradyumna Krishna Kumar, Senior VP. It gives me great pleasure to report that financial year 22 has surpassed all our yearly performances till date with the highest ever sales value as well as collections. This is notwithstanding the deadly second wave of COVID-19 in 2021, as well as huge jump in construction costs over the last 3 to 4 months. All raw material costs like steel, aluminum, copper, finishing materials, and fuel, among others, have seen huge increases due to the global supply chain issues made worse by the geopolitical situation in Europe. As a result, the total construction costs have increased almost up to 15% and are expected to rise or at least remain at elevated levels for the next 12 to 18 months. Nevertheless, the price increase affected by us in quarter 4 on the back of higher input costs has been accepted by our customers, reflecting positive buyer sentiment and the strength of our brand. We will continue to take up prices in line with the market absorption in order to maintain profitability. Our real estate business recorded our highest ever new bookings by value in the quarter 4 at rupees 1,028 crores, translating to 1.5 million square feet in area. For the financial year, we recorded 4.7 million square feet of net new bookings after cancellations with a value of 3,022 crores. The residential business also registered our best performance in collections. That is, our quarter 4 collections is upwards of rupees 1,000 crores, and for the year in whole, the collections were 3,162 crores. Our best performing projects in Bangalore were Brigade Cornerstone Utopia and Brigade Eldorado, while our projects in Hyderabad and Chennai continue to be significant value and volume drivers for us. Overall, we are positive about the outlook for the residential business. This is supported by our continuing focus on land acquisition in our key markets of Bangalore, Chennai, Hyderabad. In financial year 22, we were able to launch only 3.65 million square feet of new projects due to various delays in civic authorities, of which in quarter 4, we launched Brigade Komarla Heights, Brigade Laguna, Gold Spire, and Ivory in Brigade Orchards, all in Bangalore, and the final phase in our Hyderabad project, Brigade Citadel. In financial year 23, we expect to launch about 8 million square feet of residential business, of which 2 million square feet will be in plotted development across 3 projects in Bangalore and Mysore. This is apart from the launches we are going to do in commercial. Our office business has remained stable with close to 99% collections. We transacted close to 500,000 square feet in quarter 4 and about 1 million square feet in the financial year 22. We have an existing pipeline of over 1 million square feet across all properties. Brigade Tech Gardens and World Trade Center Chennai, our market developments, were the most sought after business addresses. Financial year 22 also witnessed robust transactions in Brigade International Financial Center, Gift City, Gujarat, with the building achieving 80% occupancy. In the office segment, we expect to launch about 2 million square feet in commercial lease and for sale projects. Our hospitality portfolio had a slow start in Q4 due to the Omicron virus, due to which the first half of the quarter saw low occupancies. But the bounce back has been impressive, with occupancies and ARRs growing strongly, reaching 94% and 72% of the pre-COVID levels respectively. This is mainly due to the increase in corporate bookings and MICE, which means meetings, incentives, conferences and exhibitions, MICE business. The retail vertical achieved higher retailer sales consumption over pre-COVID levels by more than 100% for like-to-like trading units. Rental collections have also increased and crossed pre-COVID levels. There was a recovery for multiplexes due to big box office releases. We are also seeing consistent traction on the leasing front, with new rentals greater than 20% of the pre-COVID levels on an average. I am also happy to inform you that we are expanding our business portfolio by initiating a warehousing and logistics and data center vertical. We are currently in the preliminary stages and will be in a position to share more information in the coming months. Mr. Karthi Bhaskar has joined us as a COO for this vertical. This brings me to the end of our business highlights. I now request Atul Goyal, our CFO, to take you through the financial highlights. Take care and stay safe, and thank you.
Thank you, sir. Good afternoon, ladies and gentlemen. On behalf of the company, we welcome you to the earnings call of Q4 FY22. To start with company's update, most of them has been given by CMD, but we have achieved the highest ever pre-sales in real estate of 4.7 million square feet with sales value of 3,023 crores in FY22, an increase of 9% from FY21. This quarter has been better than last quarter in terms of business performance. We recorded real estate sales of 1.5 million square feet during this quarter, vis-a-vis 1.1 million during last quarter, an increase of 42% from previous quarter. Sales value stood at 1028 crores during Q4 FY20, an increase of 50% from previous quarter. As on 31st March, Brigade had 18 million square feet of ongoing projects and 10 million of upcoming projects, including both residential and commercial project, which is going to be launched. We have achieved highest collection of 4083 crores in FY22, an increase of 51% from FY21. Overall collections in residential was up by 52%, office up by 30%, retail up by 73%, hospitality up by 79%. On consolidated level, the cash flow from operating income was 1125 crores in FY22, an increase of 23% compared to FY21. We saw a demand revival in leasing vertical, leasing of more than 1 million square feet during FY22. We have an active pipeline of 1 million achieved office renewals of 0.5 million square feet during FY22. Hospitality showed strong signs of recovery post third wave, with the occupancy reaching pre-COVID levels about 64% in March. ARR touched 78% of pre-COVID levels during March 22. Coming to consolidated financial performance of our FY22, the consolidated revenue of FY22 stood at 3066 crores versus 2010 crores in the previous year, an increase of 53%, whereas the same for Q4 stood at 964 crores versus 1933 crores in previous quarter. The real estate segment clocked a turnover of 2289 crores, an increase of 50% from the previous year with an EBITDA of 18% in FY22. The leasing segment clocked a turnover of 596 crores, an increase of 60% from previous year with EBITDA of 67 in FY22. The hospitality segment logged a turnover of 179 crores, an increase of 57% from previous year, and EBITDA of 13% in FY22. The consolidated EBITDA for FY22 stood at 833 crores, an increase of 56% from previous year. EBITDA margin stood at 27%. Consolidated PAT after minority interest for FY22 was 83 crores. Coming to the debt and liquidity position, we continue to have adequate liquidity and undrawn credit lines from the financial institutions. Our average cost of debt has been coming down consistently over last few quarters and was at 7.65% as on March 22 versus 9% as on December 20, 135 BPS reduction. The cash and cash equivalent stood at 1579 crores as on 31st March 22. Consequently, the company's net debt outstanding as on 31 March 22 is 2540 crores, out of which BL share is 1619 crores. Our real estate debt reduced by 45% during FY22 from previous year and stood at 272 crores as on March 22, driven by higher sales and collections. Almost 78% of debt pertains to commercial portion, of which 74% is backed by rental income. We have a credit rating of A+ with stable outlook, which has been assigned by both CRISIL and ICRA. I now hand it back to the moderator for questions. Thanks.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Chattopadhyay from ICICI Securities. Please go ahead.
Yeah. Good afternoon, everyone. So firstly, congratulations on a very strong quarter across business segments. So first question is what you alluded to in the beginning of the call about this 15% rise in costs. So is this at an overall portfolio level you're referring to, means across ongoing completed inventory, or it is only for the new projects which we are going to start? And follow up on that, you said that we have increased prices to maintain the margins. So could you quantify what is sort of price increase you have had to take? And for the new projects which you are going to launch in the coming year, how have you worked around the pricing for those projects, and do you see the demand sustaining with these price increases? That is the first question.
Thank you. So, see, the price increase of about 15% is for new projects to be launched, and that too subject to various issues. It is an approximate figure. No, nobody can say it is exactly 15%. It can be 13. It can be 16. But for some of the ongoing projects where it is, the structure or the building is incomplete, there will be a certain amount of price increase. That depends on case-to-case basis. And I repeat, this price increase is on the construction cost, not on the selling value or anything. So the impact on selling value can be anywhere between 5 to 8% on a project-to-project basis, and in some cases it may go to 10%. It all depends what your selling rate is, what your land value is, whether it is a purchased property, whether it is historical, whether it is present, joint development, not joint development. It depends on a whole lot of issues. So that way, we will definitely try to pass on any businessman. Even in the morning, CNBC also said any businessman or industrialist would like to pass on the cost increases as long as it is acceptable or ready to be absorbed by the customer. So the entire pricing policy in any business is what the market can afford. So ultimately, we will go on that concept, and so somewhere we may be able to increase the price by 10%, even if the cost increase is only 5%. Somewhere we may be able to increase 8%, even if the cost increase is 7%. So these are all pricing policies, but the intention is to pass on the cost increase.
Okay. So just as a housekeeping question, so what is the quantum of, or what is the range of price hikes you have taken in this last quarter? Range, if you could share.
For 5 to 8%. 5 to 8% is the increase in prices in the last quarter.
Okay, 5 to 8%. Okay, fine. So second question, this is on the leasing. So I think last call we had said by the end of maybe FY23, right? Under 12 months from now, we are targeting to lease out the entire vacant area, which we have around 2 million square feet. So any fresh update on that?
No, even now that is the target. That is certainly the target. Our team is working hard to do that. And I think based on the number of inquiries that we are receiving or what we have finalized in Q4, it is encouraging. And at this point of time, while we are saying we will do 1 million square feet, the target is certainly to come out of the existing stock.
Okay. So, sir, but when do we see a good visibility or some deals getting closed? Will we be expected to be back-ended in second half of this year or?
Yeah. Okay, our Subrata will talk.
So, Aditya, this is Subrata. So,
yeah.
What we are saying currently, see, the momentum is there since the last 2 quarters, and particularly in this quarter, we are seeing some active pipeline and very active. Like in the next 2 to 3 months, we are having an outlook of 3 to 4 lakh square feet. But having said that, the number of inquiries have significantly increased. The populace across the parks have increased significantly. It's now currently 25 to 30%. As people are coming back to offices, the requirements are maturing. Okay, so that's why we have a very positive outlook, and we still maintain the same outlook of exhausting the inventory in this financial year.
Okay, got that. Then last question is, so we had said that we launch 8 million square feet this year. So if I understood correctly, out of this 2 million will be the commercial, 6 million will be resi, of which 2 million square feet will be plots. Is that correct?
No, actually it is the other way. It is 8 million square feet of residential, of which 2 million is the plotted development, plus 2 million of commercial. Totally 10 million square.
Okay, totally 10. And so this 2 million in office includes this Twin Towers, First or Deccan Heights, which are marketing as Deccan Heights now? Is it?
No. It doesn't include Twin Towers. We are launching another project called Brigade Padmini Tech Valley, and also we are launching a commercial block in Brigade Cornerstone Utopia called Elysium, and 1 or 2 smaller projects.
Okay. Sir, any guidance you'd like to share for Resi for the coming year, since we have such a strong launch pipeline now, next 12 months?
See, morning in the TV, I said, interview, I said we should aim at 20% plus as the growth.
Okay, 3,500 crores plus. Yeah, 3,500 crores plus at an aggregate.
No. I meant in terms of volume, not in terms of revenue, but primarily because revenue can be even higher considering the inflationary aspects. I also said in the morning our current average realization is about 6,400 rupees, and it may go up to 6,900 to 7,000 rupees in as average realization, depending on the kind of mix it will have. So if that happens, God willing, it will reach 4,000 crores.
Okay. Fine, sir. That is very good to hear. Yeah. So all the best. I'll come back in the queue with more questions. Thank you.
Thank you. Before we take the next question, a reminder to the participants, in order to ensure that other participants get an opportunity to ask questions, please limit your questions to 2 per participant. For any follow-up, may we request you to rejoin the queue. The next question is from the line of Karan Khanna from Ambit Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations on another resilient quarter. So firstly, sir, on the real estate business, you mentioned you have 8.3 million square feet of launch pipeline for FY23. Can you help us understand for how much area the approvals would already be in place and your target quarterly launches?
Yeah, I will try to say that. Yeah. I would say other than about 2 million, I would say 2.5 million is yet to be approved. Rest are all approved.
Sure. And, just extending the previous question, what we also noticed that the launch pipeline is spread across Bangalore and Hyderabad. You've recently added the Chennai land parcel, 4 million square feet. Any thoughts with respect to the outlook on this micro market and your plans in terms of the project mix?
I think it is a combination of commercial and residential. If you are talking specifically about the TVS deal, other than that, rest are all residential.
Sure. And, in the last call you mentioned you were actively evaluating a 1.5 million square feet land parcel in Hyderabad. So any developments on that since we last interacted in the last earnings call?
It is still work in progress.
Okay. And lastly, on the retail portfolio with consumption surpassing the pre-COVID levels, will it be fair to assume that rentals would have been normalized April onwards, or there would be a few tenant classes which are still impacted and hence would have rental waivers?
Yeah, Nirupa Shankar will answer.
Yeah, good afternoon. I think with the sales volume coming back into the retail business, I don't think there are any more COVID rental reliefs given for the larger malls. One or two of the smaller malls might have some revenue share deals, but by and large, collections will be as per the lease date.
Okay. Sure. Thank you, and I'll come back in the queue. Thank you.
Thank you. The next question is from the line of Girish Chaudhary from Spark Capital Advisors. Please go ahead.
Hi, good afternoon. Thanks for taking my question. On the Chennai market, given your portfolio is now doubled to around 8 million square feet, so if you could give if you could give any sense on when can we see from a launch perspective, because this is not figuring in your upcoming project pipeline of 8 million square feet.
Yeah. It's primarily because they're in different stages of seeking various approvals, and in one or two cases the final due diligence aspect, though we have incurred substantial amounts. So I would, since we still have 10 months time, if we are lucky, we can launch in this financial year. So we didn't want to be over optimistic about the Chennai launches. So yeah, there is just a possibility it can get pushed into the next financial year. So maybe around quarter 3, when we talk about Q3 results of FY23, we'll be in a better position to make a commitment.
Okay. Also, there has been recent FSI changes for the land parcel which you bought in Chennai, the Mount Road property. So, is there? Can we see any increase in the development potential because of that, or is that already adjusted in this 4 going to 8 million square feet?
See, right now it is all media reports. It is nothing has been translated into a government policy. If the government policy happens, definitely we will be benefited, and it is beneficial to us in terms of higher FSI. Currently, we are looking at 1 million square feet the way we have taken. If that happens, if a higher FSI, which we do not know whether it is 6, 7, 8 as the media is speculating, if that happens, it can go to 1.3 to 1.5 million square feet. And our overall FSI cost is bound to come down significantly.
My last question on the land balance payable of 940 crores. If you can share any timelines by when by when this has to be paid.
See, out of this, bulk of it is for the TVS land in Chennai. That is should happen in Q3 FY23. And the other remaining thing is government of Karnataka, the Industrial Development Board has allotted us 75 acres land near the Bangalore airport. We have paid about 30% so far. the remaining 70% which need to be paid. It is definitely going to take now 9 months or so. It all depends on they also need to comply with certain for formalities, but it is likely to happen in this financial year, but not in the next 2-3 quarters. It can happen in Q4 or Q1 of next financial year.
Got it, sir. Thank you.
Thank you. The next question is from the line of Pritesh Sheth from Motilal Oswal. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So first question is again on the land pipeline. So we had this 66-acre plotted development signed up in Bangalore in Devnali, and I see there's 89 acre in total. So can you highlight where the rest of the land on plotted development sits? Is it Mysore or somewhere else?
I'll tell you. See, one is about 15 acres in Mysore, about 66 acres in Devnali, and another 7 acres and odd as part of Brigade Orchard.
Okay, got it. And can you just share the details about the TVS land, the size that we are looking at, and what was the consideration that we had to pay?
See, it is it was there in the media also. It is totally about 500 crores is the transaction value, and currently about more than 10% is paid, and the balance will happen beginning this quarter, and it should get completed in Q3.
Okay, potential is 1 million square feet. Is it right?
Potential is 1 million, which in the previous question I said it has a possibility or probability of going to 1.3 to 1.5 million if the authorities in Chennai relax the FSI rules like in Hyderabad.
Okay. And lastly, the breakup of collections that you normally give, the 1,300 crore split between residential, retail, commercial. Yeah.
Our CFO will give.
Yeah. So for Q4, the collections are for residential is 1,008 crores, commercial sale is 49 crores, commercial lead is 108 crores, retail is 47 crores, hospitality is 73 crores, and our maintenance PMS is around 49 crores, which totals to 1,334 crores.
Okay, thanks. And sorry, one last question, if I may. So, residential collections have been very robust, reaching 1,000 crore now. Should we see this run rate sustaining from here on, at least for next couple of years, and obviously from there on it will grow, because for this to have, our residential sales has to sustain at around 1,000 crore, which we clocked this quarter, but previously we haven't had that consistency in terms of sales. So how do you see this trajectory going forward?
I'll say only time will tell, but yes, you're right. Residential sales in Q1 is not generally the same as Q4 in any financial year. And but the team is working hard for collections. But it not always be related to sales. It can also be related to the already existing sales that have happened and collections that are to come in.
Sure, got it. That's it from my side. All the best.
Thank you. The next question is from the line of Mohit Agrawal from IIFL. Please go ahead.
Yeah, thanks for the opportunity and congratulations to the team for a good quarter. So my question is on business development. Now, if I see the change in land reserves, it's about 9 million square feet net in this quarter, and you've launched about 2 million square feet. So probably gross land bank addition will be 11 million square feet. So could you explain, how much would you have spent for this land addition, and what would be the GDV addition expected on this? And also, what should we look for the next 1 year? What is your target in terms of business development? Is there, like you had earlier said, 15 million square feet, I remember, till September. So any targets for FY23 on business development?
See, the amount that is to be incurred, it is sort of indicated. It is sort of indicated in
24 crores.
Yeah, 942. Yeah, 942 crores, and of which I did give the breakup for the previous question. The big ticket items I mentioned concerning the TVS and the government allotted land. And as far as adding the more lands are concerned, definitely it is a continuous work in progress. We will we would have signed something, but it may still be in due diligence. So it is too premature for us to share all the details in this call. Unless we have definitive agreements or a memorandum of agreement, it is difficult to share. But the team is working towards, signing this 10 to 15 million square feet.
Sure, sir. 940 is the total payable. I actually wanted to ask for this quarter, how much would you have paid for the land, including the TVS transaction?
It will be under 100 crores.
It will be under 100 crores. Okay. And sir, just one clarification. This, before COVID, you used to give exit rental guidance, which for about 8.7 million square feet portfolio, used to be about 730, 740 crores, gross rental. So, assuming now you're already there, you've completed 8.7 million square feet. When should we expect, that 730, 740 crores to start coming in?
Yeah. So, as we have been saying that we have already achieved 600 crores, and we think by next year, as Subrata said, that we are targeting our total leasing this year. So if it happens, maybe this year we will achieve the full leasing, and of course the total impact may come in mid of the next year.
Just to add a point, it all depends. Again, I mentioned it in the morning interview with CNBC. So it is a bit difficult to predict when the rent commencement dates will be. Even if you conclude a transaction, so it all depends on the rent commencement dates. So based on that, it will happen.
Okay.
As
sure, sir.
by our CFO.
Yeah. Sure, sir. And so just last one, you've mentioned that you've taken in the Resi portfolio, you've taken a price hike of 5 to 8% for fourth quarter. Could you give this number for the full year? FY22?
Yeah, the price is Savitra. Price hike for the whole year is around the same, 5 to 8%. Basically, we've taken it wherever possible. So in some projects, we've been able to push it earlier in the year. In some, we've taken it later. And definitely the new launches that we mentioned in Q4 have also been able to launch at much higher rates than we previously thought possible. And all of that has been absorbed by the market. So based on that, we feel confident to take our prices up even in this upcoming Q1, which we have already communicated to the market.
Okay, so Q1 you are expecting another hike. What would that be approximately?
Another 5% or so. And again, we are looking at it on a project by project basis. It's very hard to also very aggressively increase prices because, that has to be absorbed by the market. So we're taking it up slowly. The goal is to take it up slowly over the course of the year so that we also can keep an eye on the increase in cost side as well and do it that way.
Okay, sure. That's all from my side, and thanks a lot for answering my questions.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. Also a reminder to the participants, please limit your questions to 2 per participant. For any follow-up, may be requested to rejoin the queue. The next question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead. Mr. Kandpal, sorry to interrupt. If you can take the phone off speaker, please. There's a lot of background noise that can be heard.
Hello. Is it better now?
Yes, sir.
Yeah, so my first question is on the overall this land bank addition. So how much has been added in this year, and what is the total consideration which needs to be paid?
See, that total consideration was already indicated in the previous two questions, about 900 and odd crores that are there. What is going to be added, we did say it could be about 10 million. Our team is working towards 10 million. But how much consideration will go towards that, it is too premature for us to commit. It depends on where the land is, whether it is a purchase, ownership, lease, all those joint development. It all depends on all that. So it is premature. But whatever we do, we will do keeping in mind our financial capabilities and whatever leeway we have in the debt equity.
So my question is, because of, if you see out of this 900, 500 is committed for 1 million square feet development, and balance 400 is for roughly about 9 million square feet development. And then we are looking to also add warehousing and data centers. So we have 900 crores of able land data. Some allocation will go towards data centers and warehousing. So plus some capex on twin towers of about 400 crores. We just wanted to understand, first of all, on this previous land, what is the intent? What are you going to develop there? Is there any capex set which will come up there? How much is the capex on that? And how are you going to fund this entire 900 of land bank plus 400 of twin tower capex, 1300? So plus if there is anything commercial coming on TVS. So can you just give a glideway, a pathway of how we're going to fund this?
So it will be a combination as always. As always, it's a combination of internal resources, financial institution borrowals in some cases, or in this particular case, there is a lot of interest shown by private equity players. So discussions are at different stages. So naturally, I won't be able to share anything more on that, but naturally there will be some amount of private equity will come in.
Okay, so but what is the strategic intent of getting into data centers and warehousing? We have a very strong.
You are not clear, please. No, you are not clear.
I'm saying, what is the strategic intent of going into warehousing and data centers? We already have a very robust residential business, and we are also doing capex on office assets. So what was the rationale going behind warehousing and data centers? If you can just explain on that.
The rationale is it is a new growth area. It is a new growth area as the country progresses. There is huge amount of the demand for logistics and warehousing. Sometime back I had mentioned there are developers in China who have got warehousing and logistics of 450 million square feet. Just one developer. Whereas in India we have not even scratched the surface. Everybody together, we are under 100 million square feet. So if 100 million square feet. If you consider in China, it has exceeded 1 square feet of warehousing and all that, much more. So that way, as the country progresses, if the economy from 2.5 trillion, if it goes to 5 trillion, the demand for warehousing will not just double. It will go up by 5 times. So we just want to examine. We'll proceed with caution, not indiscriminately.
Okay, thank you. And all the best.
Thank you. The next question is from the line of Akshat Mehta from Pioneer Investment. Please go ahead.
And congratulations on a great set of numbers. My first question is, what would be the demand scenario if interest rate hikes happen aggressively?
Yeah, so see, as Pavitra and CMD had said, there is a good demand in the market. Yes, of course, rate hike will happen, and you see from 6.75%, it has gone to 7.15. But if you see AMI, EMI increase has only been 3%, and affordability has been very, very great for the people who have been working, and since these south cities are majorly ITS hub, and the salary increase they are looking, I think interest rate may not affect that much, but it all depends how much RBI increases the rate. And see, because retail market is a very competitive market. Today I was listening that banks are today going to the wholesale retail market, because retail market has become very competitive, and for them to increase price is very, very difficult. So I think it may not affect that much, but let's see, because it is an uncertain scenario, like the way repo rate was increased by RBI. So let's see. It's very difficult to say right now, but we are hopeful that the demands will sustain.
Okay, and so another question. In Q3, we added 0.4 million square feet, and in Q4, we added 0.2 million square feet. So on the leasing side, the momentum of fresh leasing has slowed down as compared to last quarter. So what are the reasons behind slow growth?
Leasing. Scale or office?
No, office, in fact, we have seen robust growth over the last 2 quarters. And the total financial year, we ended approximately 1 million square feet. And this quarter also, we are seeing quite a good momentum in terms of the inquiries, in terms of closure possibilities. And in fact, the real requirements are coming by, because office reoccupancy has increased significantly. So our outlook is quite robust.
Okay, sir. And so one last question. What's the guidance on incremental leasing from your own?
Incremental leasing, see, we have an outlook currently based upon the pipeline. We have a pipeline of almost 1 million square feet. Out of that, we feel that around 3 to 4 lakh will be closed over the next 2 to 3 months. And going forward, see, most of the transactions that have happened pan India in the first quarter is majorly due to small and mid-sized companies. And going forward, we also feel the big size requirements will come. So I personally feel that going forward, the pipeline size will also increase. The transaction size also will increase. So the outlook is quite positive.
Okay, sir. That's it from my side. Thank you.
Thank you. The next question is from the line of Yashwant Bangera from Knight Frank. Please go ahead. Yashwant Bangera, your line is in talk mode. Please go ahead with your question, please. Seems like we lost the connection for the participant. We will move to the next question from the line of Samar Sarda from Axis Capital. Please go ahead.
billion rupees, 3,000 crores.
Mr. Sarda, we were unable to hear you. If you can please repeat your question.
Hello, can you hear me now?
Yeah, now we can hear you, sir. Please proceed.
Yeah, I had a couple of questions. One, we've taken roughly 3 years to go from 2,000 to 3,000 crores of sales. If you could guide us over what time frame, 18, 24 months or 36 months, we could target 4,000 crores of yearly sales. That is my first question.
So just to correct, we've taken 3 years to go from 1,500 to 3,000 crores. In 2018-19, we had in residential, we clocked our sales about 1,454. Adding everything together, we were about 1,500 odd crores. So in 3 years, we have kind of doubled. We see that given the land bank that we have, our execution capability and sales capability, we should continue to deliver similar levels of growth in the next 2 to 3 years. As Chairman said, we are looking at about 20% area growth in the year to come, the FY23.
Since realizations are going up, probably value growth will be faster, right?
Yeah, I did mention in the earlier thing, if you are looking at a 20%, aiming for a 20% growth, it is not from 3,000 crores to 3,600 crores. But if you want to consider the inflationary aspects and price increases, sometimes for the same volume, we can go up. So, but it is premature to commit, which all depends on the mix that happens. And I did mention the current average selling price is 6,400 rupees. It's a likelihood, including the inflationary costs, etc. It can reach 6,900 to 7,000 rupees at the end of the year.
Okay. My second question with respect to some of these notices on property tax and the assessment of stamp duty which was completed. The Brookfield property also, like the assessment on stamp duty ended up a little higher. Plus we've got a 90 plus crore property tax notice on a hotel this year. If you could A, give a little more clarity on these notices, and B, whether it is like across the market or it's like more particular to do with our property.
No, it is across the market depending on where the properties or hotels are located. So there was a move by while for residential, for commercial officers and commercial officers, the property tax applicability depends on location. There are 6 zones in Bangalore called A, B, C, D, E, F. Okay, so the rates change from zone A to zone F. Zone A is always the central business district and zone F is the peripheral area. So that is the variation the authorities have kept for residential and office buildings. Whereas when it comes to hospitality, erroneously they had kept one rate for all hotels. So that has been challenged. So that is work in progress. We won't be able to share anything more. The matter is also in the High Court. So that way, I don't think that kind of liability will be there. But it is the job of the statutory auditors to make a note. We can't help that.
Fair enough, sir. Since it is for a period of 8 years, what would be the penalty? What would be the property tax demand and the penalty and interest? Can you share that breakup at least?
No, we won't be able to share the breakup, but it is including all that.
Thank you and all the best for FY23.
Yeah, thank you.
Thank you. The next question is from the line of Venkat Samala from Tata AMC. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, with respect to the 10-11 million square feet that you've added, if you could give a breakup of how much would be outright and how much would be through JDA? And also, as an extension...
Readily I cannot give, but
okay.
It can always be informed maybe in the next week by our CFO.
Okay.
Don't want to offhand give a wrong figure.
Right. Sure, sir. And with respect to the TDS land parcel that we've acquired, I understand at this point in time the development potential is about 1 million square feet. But what would we be expecting in terms of, overall, bookings or rental revenue, whatever you are envisaging to build there? Any color?
Sorry, I'm not very clear of the question. Question is not clear.
So I think you mentioned that as on this date, you are planning a mix of residential plus commercial there, right? On the Mount Road, previous land parcel.
8 million is residential, 2 million is commercial. Yeah.
Okay. So what I'm trying to understand is what kind of realization can we expect on residential, and if we are building a commercial, what are the rentals there?
No, we have not even calculated so far. It is, everything depends on the mix. So it is all work in progress. We will be doing, the exact how much is residential, how much is commercial, how much is retail. It is all work in progress. But whatever gives us the best feasibility, we are going for that. It is on the drawing board.
Right. Sure, sir. So the only reason that I was asking particularly about this project is because, 500 CR seems to be slightly on the higher side. So therefore, I just wanted to understand, what...
Actually, it is not on the higher side. If I want to...
No, that is the reason I was asking. Sorry, sir?
If I want to sell the property today, I can sell it at 20% more. So it is not high.
Okay. Sure. Maybe I'll take it offline as to what the expectations are. And lastly, sir, the 8 odd million square feet launches that you have planned, will it be well distributed throughout the year, or it will be more lag-ended?
It is, I think, normally it is distributed, but bulk of them will come during Q1, Q2.
Okay. So given
half of Q1 is done, Q2, Q3.
Okay. So then, 900 to 1,000 odd crores per quarter should then be doable, right? I mean, this could be like the base moving forward, assuming the launches come through. Would that be a fair assumption?
We'll keep our fingers crossed and work towards that. And also overall, sentiments in the market macro environment to be seen. As long as our buyers don't look at the stock indices, it is okay.
Okay, sir. Thank you. Thanks a lot. Wish you all the best.
Thank you. The next question is from the line of Rohit Chimpi from SBI Funds Management. Please go ahead.
Hi everyone. Thanks for taking the question. My question was on the plotted market and how you look at that as a business opportunity. Do you see it as more of a one-off kind of opportunity led by the pandemic, or do you think this is a more structural long-term opportunity for the market and for the company?
See, Bangalore and many southern cities have always been there is always been a market for plotted development. It is only that the recognized developers or the developers who build apartments had not got into it in the recent past. So now I think COVID is one of the reasons for many developers getting into it as an avenue of business. And also as far as buyers are concerned, they are also looking for an avenue for investment. So currently plotted market development is a flavor of the season.
Right. So I just get from a thought process, would you want to continue to invest in more projects on the plotted side, or you think you would like to look at the current ones and then take a view looking at how the market is?
No, as long as they're geographically distributed, and we don't mind looking at them, and as long as it's a continuous process of feasibility calculations. If there is a market where we don't mind entering, subject to usual due diligence process and all that.
Okay, thanks. And just last one from me was that during the pandemic and the work from home scenario, we understood that many buyers are preferring actually larger apartments. Are you seeing that trend continue, or is work from office and return to schools causing any change in that buyer thought process?
We expect it to continue, at least in FY22 it has happened. FY23 we expect it to continue primarily right now, at least in the IT sector. IT sector, it is going to be more a hybrid situation than in other financial sectors and other businesses, corporates, where it is almost back to 100% back to office. So in the IT scenario, I think this hybrid will be there, hybrid situation will be there. That should continue to make people go for a larger size of the apartments or the houses.
Okay, thank you so much, sir.
Thank you. The next question is from the line of Parvez Akhtar Qazi from Edelweiss Securities. Please go ahead.
Yeah, good afternoon and congratulations for a great set of numbers. A couple of questions from my side. First, a bit of data specific thing. What would have been the contribution from launches to our pre-sales in Q4?
So sorry, we'll come back to you with the correct figures next week.
20%.
My team tells me it is 20%.
Sure. And how much of the sales, I mean, I just need a ballpark number, would have come from outside Bangalore?
In terms of total sales for the year, about 40% came from outside of Bangalore and 60% came from Bangalore by value.
Sure. And in terms of what was the rental income from the BTG and WTC Chennai this year?
It was around 90 crores from Tech Gardens, and PREPL or the Chennai was 105 crores.
Okay. Great. That's it from my side, and all the best from future.
Thank you.
Thank you.
The next question is from the line of Alpesh Thakkar from Antique Stock Broking. Please go ahead.
This is more on the new business initiatives that we have. So, as you mentioned that you see that Bangalore being a tech-heavy industry, and you see that the trend would be more into a work from home kind of a situation or the hybrid situation for the office side. So is that one of the reasons that you are looking for growth avenue in terms of data centers and warehousing, in terms of annuity business for yourself over a longer period of time?
No, see, there is no relation between work from home and the data center business. I would say the data center and the logistics business is a reflection of the government policies on connected with the data security. And as far as logistics is concerned, it is the way the e-commerce is growing across the country, and also the GST policy or the GST introduction has made things much more, I would say, easy for people to do business across the country. That is the reason. And Bangalore is one of the going to be one of the hubs. Of course, data center or something like Chennai or Mumbai may have a greater potential, but it does not mean Bangalore has no potential. It has potential. Similarly, the land is near the airport, so that way there is it's in the high-tech zone and the aero park zone with so many aerospace companies like Boeing, Collins, and others, several others having already established in the aero park. There is also and always be demand for high-tech components, storage and logistic issues.
Okay, thank you. And second, sir, can you, like, on a broader scale, how does the business economics stack up for warehousing and data center compared to like office leasing or the retail side? So is it like much more lucrative, given the fact like there would be some players who would be doing it already right now? So how does the business economics stack up in terms of IRR or the kind of business economics for us as a business?
Each one has to be seen in its own individual basis, sectors. If everything is compared to residential, then it may be difficult for other businesses to happen. So I think the data center has to be viewed in its own merit, and so sometimes it may be more beneficial IRR, sometimes it may be slightly less. But as long as it meets IRR requirements of the developer and the investor, I think there is nothing wrong. Give or take 1 or 2%, it is another avenue of business.
Oh, okay, makes sense. Thanks a lot for taking this. Yeah.
Thank you. We take the last question for today from the line of Adhidev Chattopadhyay from ICICI Securities. Please go ahead.
Yes, just a quick one. So now that the hotels have again seen pick up in momentum, So are the talks for again divesting stake to the PE investors, is that back on the table?
It is always on the table. The right valuation, and certainly in the last COVID period, we had kept it in cold storage because there is no point trying to get a PE investor looking for a distressed asset. We did not look at it. Now, as we talk, I got a mail from a PE investor expressing interest in hospitality. So I'm just saying within the last 1 hour. That way, whenever the right proposal comes, we are open to look at it. But post-COVID, things have started looking up only. So I don't think we're in a great hurry to finalize a PE investor who would like to ride on the wave. So we would like to ride on the wave first and then invite the PE investor.
Okay, so but any ballpark you'd like to share with all the newer hotels? Obviously, because of COVID, they could not contribute, right? That scale up we did not see. But with all the entire hotel portfolio does well enough, what is the sort of revenue or EBITDA potential which your existing portfolio may have? Any ballpark number you'd like to share?
Yeah, Nirupa will talk.
Yeah. So hi, Adidev. So all the hotels, at least in Q4, are all profitable. If it's for FY, you already know what the FY22, the AGOP was around close to 36-37 crores. Look at how April and May have been. The hotel doing extremely well. The ARRs have crossed pre-COVID levels. The occupancies in most cases have also crossed pre-COVID levels. So very bullish because of the travel. We are hoping to definitely cross pre-COVID year FY20 and get EBITDA multiples at least 15 to 20% higher than what it was pre-COVID in FY20.
Okay, fine. That's very helpful. Yeah. Thanks and all the best.
Thank you. I now hand the conference over to Ms. Pavitra Shankar, Executive Director, for closing comments. Over to you, ma'am.
Good afternoon, everyone. Apart from financials, we have a few highlights to share with you today in closing. It's with great pride I share with you that our Chairman and MD, Mr. M.R. Jaishankar, has been conferred with an honorary doctorate for his contributions in infrastructure development and philanthropic approach to social cause by the Bangalore City University. Over the last 35 years, Mr. Jaishankar has, through Brigade, led by example as a visionary in the industry and an upstanding citizen who has given back to the community. It's indeed a proud moment for all of us at Brigade. I'm also very proud to share that our Executive Director, Ms. Nirupa Shankar, was recognized in the Elite 40 Under 40 list 2022 across India by Economic Times. The Brigade Foundation, a not-for-profit trust, was established with an objective to promote education, healthcare, and community development. 21 and FY22, the foundation spent crores on CSR and other welfare activities. In line with its focus on community development, Brigade Foundation, in association with BCIC, that's Bangalore Chamber of Industry and Commerce, will be establishing the Brigade BCIC Skill Development Academy, a center of excellence and not-for-profit academy in the fields of construction, hospitality and tourism, manufacturing and retail. Brigade Foundation will also fund the Go Sports Foundation to conceptualize and implement a cricket excellence program for women cricketers in India under the name Equal Hue Cricket Excellence Program. This program will aim to create pathways for aspiring female cricketers from across the country. Go Sports Foundation is a non-profit venture working towards the development of India's top talents in Olympic and Paralympic disciplines through athlete scholarships and knowledge-building programs. The Indian Music Experience Museum, founded and supported by Brigade Group, curates interesting events and exhibitions, one such being Birdsong, which is getting great reviews from music lovers and naturalists alike. It's running through June this year. The museum is also running an amazing youth mentorship program in partnership with the Manchester Museum for its international festival in October in Bangalore and next February in the UK. And with that, it's a wrap for the financial year 22. We look forward to the coming year and hope you will all stay healthy and stay safe. Thank you.
Thank you. Ladies and gentlemen, on behalf of Brigade Enterprises Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.